All right, today is Wednesday, July 23rd, and I haven't made a video in a little bit. The last post I made, the trading idea that I had was on the Euro USD. I think maybe 2 weeks ago. Um, I'm actually still in some short trades, and I'm making this video, because right before this is right before ECB, which is tomorrow. It's supposed to be tomorrow, I think, at 8:15 Eastern time, or I think it's 8:30. Um, but yeah, this is a pretty interesting trade. And I'm going to backtrack just a little bit on some of the reasons why I've been building short positions uh, on the Euro USD, even though we've been having um, a lot of bullishness all the way back over here in late June. I mean, this was actually pretty brutal, going all the way up because, like I explained on my initial post or trade idea, was that this looked like a decent area to go short, um, because there was some divergence here on the MACD. There was also one divergence on the linear regression momentum indicator that I have, and also the RSI. So I figured over here was probably going to be a decent area to go short. And once I saw that we gapped down and recovered pretty strongly, I mean, it was just complete relentlessly, right? The market just kept going up and up and up every single day, even all the way up towards towards the following week when it gapped up, and that was kind of like a little signal maybe to traders that this was gonna cover this gap and then finally come down, but it just pushed even higher. So finally, we got a little recovery. So my thought of thinking, or my line of thinking, I should say, was that okay? I started building shorts over here around the 1500 area. Then I started adding shorts up at 1600, and I have a good amount of shorts that I've added. Well, a good amount of shorts in total, but I added in the 1700 area. So once we started going up, I would say close to 1700. I was thinking of, hey, if we go up to 1800, I'm probably going to cut it. But before I did that, I wanted to really make sure that, I don't exit the trade prematurely, even though I'm going to have to suffer a little bit of drawdown. But that's fine as long as I manage the position sizing. And I allowed it to go up to 1800 for the following reasons. Well, number one, I was looking at this trend line that I always talk about, which is support and resistance to support. And I wanted to see if there was going to be any type of trend line up in this area. So when I drew it out and I took it from here all the way to this resistance, I noticed there was probably going to be a resistance, and it was right in this area. So I said, well, the market's probably going to try to continue higher and hit this 1800 area before moving down. So that, coupled with the divergence across three indicators, had me really, guessing like maybe I shouldn't, jump the gun and exit positions, because there's good likelihood that the market's going to turn around up at 1800. The other reason is, if I put on the yearly pivot points, you can see that it hit R3, and that's why on the last idea I put that this area was a hot spot for shorts. So this actually turned out to be a really good recovery. So on the way down, I did lower my exposure a little bit. I closed some positions, but I still wanted to have a good amount of positions on, just in case that we start trading lower, which I'll get to in a second. So, and actually, I skipped I jumped the gun a little bit on the pattern. So these two trend lines here it's a rising broadening pattern. I always talk about broadening patterns. They always diverge away from each other, which indicates, I guess it depends on your perception, but you can kind of tell when the momentum on a certain direction is, is fading out. So when you have that along with divergence, whether it's bullish or bearish, you can kind of get an idea of when, what area the market may be exhausted and start, begin to making a turnaround. So that's why I feel that this is still not over. Yeah, once we got here, this was kind of tricky because what I thought was going to happen was this trend line, these two resistance points. I said to myself, okay, this market's going to come down, and a lot of, it's going to bring in a lot of buyers here. A lot of bulls are going to try to come in around that 1.1600-ish area and 1660s. And they actually, it did find support here. You found support once, twice with these long wicks, then a gap lower, and it tried to hold this support, but it couldn't, right? So now this was going to be served, common sense is like, hey, support turns into resistance. So the following, after this big down day here, the following day we had a huge move to the upside. I remember it was it was down like about 0.30 or so, and then the rumor came out that Trump wanted to get rid of Powell, and this thing jumped up, I think 130 pips quickly. So that must have been a frustration for traders that wanted to go short here, and those who ended up holding on to those short positions, thought they were safe. But of course, now we're trading all the way up back above that trend line, right? So, if it kind of gets a little, if you're looking to zooming in too much, you're going to get whipsawed out. Market's always going to make some moves that you don't expect. And that's why I zoom out and I look at this pattern as my guideline of what I'm looking for and, what do I expect. So now that we've rebounded just a little bit, I'm thinking, okay, what's the max point that I would be looking at? Well, we have a good amount of economic data coming out, both U.S. And like I mentioned earlier, ECB, right? We have a lot of, let's see over here. We have, this ECB main refinancing operations rate, ECB monetary policy statement, ECB press conference. Those three things I'm going to be watching for. And I think that'll be the mover. You never know. Sometimes it's a dud. But these three things here are what I'm going to pay attention to. And of course, at 9:45, we have the PMI, right? So this is kind of like, I'm still bearish, but 1800 now, 1820, I would say, is certainly my cap. Because maybe if it does spike up, I will give it a little bit of room. But, for price to be trading to for the pivot, the yearly pivot R3, it's actually pretty rare. I mean, I went back about 15 years on, where you could backtrack on the yearly pivot points. And it's very rare that price gets to R3 or S3. So, take that as you will. But if it jumps up in this area, I would figure it's going to make a double top here, and it's going to make a double divergence. And I'll show you just in a second. Let me just hide this pivot point here. So okay, from here to here, let me just change the trend line real quick. Okay, that was our first divergence. And that 1800 was a good area to attempt to go short here. So that was our first divergence across the three indicators, right? And then now it's bouncing up, but look how low the MACD is. Look how low the RSI is. If it does go up and revisit and retest this area, I think it might be a really good indication that this thing might roll over if it does get up that high, because then you have a much lower high on the MACD, you have a much lower high on the RSI, and you have a much lower high on the linear regression momentum indicator. So that in itself, coupled with price getting to R3, is, in my opinion, pretty substantial. Again, nothing's set in stone. Of course, you always have to manage the risk, but I think that would be a good indication. It wouldn't be a bad area to go short, you know. And if we do start rolling over, and this whole setup plays out, then I think I would look for a target of 113, the 113 area. 114 is a little short, but the way I decide that is I take the Fibonacci tool. I'll start all the way down here, measure the top. This is the assumption that this is the top. So this could make a little bit higher, but either way, it's roughly should be around the same if it does jump that high. And this would be my first area of target between 30% and 36.9, which is right in the wheelhouse of 113. Actually, if I add the 50%, yeah, 50% that's a little low, 1.1. Maybe 1200 is not a bad area if this rolls over. And I think, what are we? We're in, like July. So we're in Q3. And I think Q3 might be a time where the USD, the US dollar, goes on a little bit of a rally before, I would say, Q4 going into 2026. I believe the US dollar is going to continue selling off. So, but let me also go. So that's my reasoning here for the daily chart. Let me go into why I think 1.12, 1.13 is a good area to look for. We start rolling over. We're going to have to go over to the monthly chart. And you can see how this is an expanding pattern, right? So you have the resistance here. We start off small, resistance. We come down all the way to support again from this support level, and it breaks all the way out. I would think that this is not a full, even though this did pull back here, it still ended up with a green candle. And then we had a super strong monthly candles to the upside. I think this candle will start coming down and we'll test this area right over here. Now, if I put the yearly pivot points, that's right in the median area, right in that wheelhouse, 1.12. And we'll get around this area, maybe consolidate a little bit. And then going in towards the end of the year, into the new year, it's going to start rallying. And my macro target was 1.2, 1.2 plus actually. So, but who knows? If it starts rallying up, then we might get to 1.2, sooner than expected. But for profit's sake, right? I would love for this to come down so I could profit on the way down and then profit on the way back up, right? Because I'm still bullish Euro USD long term, and I'm bearish US dollar across the board long term. And again, let's go a little further. If I go to a 3-month chart, this is why, right? This bullish wedge, this falling wedge, that's developed for over since 2005, all the way to recent. We've got that breakout, right? That's definitely evident. This is a strong breakout, clean. I mean, hardly any wick to the bottom, no wick on top, just a super strong bullish candle. But sometimes we do get a breakout and then we get a pullback. So that's also why I'm thinking that, hey, we'll pull back, and then the next 3-month chart or 3-month candle will start exceeding that and start trading above 1.2. 1.2 I really like, because if I put the 10-year pivot points on, let me hide some of this other stuff here. Okay, that's the main pivot area. Let me put the prices on, actually. 1.217. That's not a hard level. I think the market will definitely exceed that to 1.2, which is a round number. But if we pull back, there's no way I would stay short. I'd be looking for long positions all day. We'll definitely get 1 point. Oh, here we go. 1.2 217. And then I think we can go even higher to 1.25 possibly in the long term. So that's the reason why long term I'm bullish. Looking at a 3-month chart, we already broken out of this falling wedge. This is a clear breakout. This whole move that I'm expecting or trying to jump on is because markets don't move straight up, straight down, right? There's always going to be waves. So if you go back to the daily chart, I'm expecting for this to roll over. We'll get a little pullback based on this huge move to the upside, and then we could start building long positions again for the next move, wave up, right? So that's pretty much it. I won't go too much. I don't want to make this video too long. I won't go too much into the pound dollar yen. Well, there is something interesting on the pound dollar that I'll go over real quick. So this is pretty interesting and also probably pretty frustrating for some traders who saw this. Let me just move this stuff out and rewind this a little bit. So I mentioned this was weeks ago, but I mentioned this would probably be a really good area to go short, right in this zone, right? 35 and change, maybe 3,600. That's a little too much on the top. I don't know if anybody was get short that perfectly, but somewhere in this area, it was evident that it was going to be, this is a rising wedge, which is bearish, right? Once we got this huge down move, this was a pretty strong candle. That probably enticed a lot of traders to go short. And right after that, what are traders are going to do? I'm going to put my stop loss right above this high, right? Maybe 3660 or maybe as high as 3700. And the market just takes everybody out, and what does it do? It reverses all the way back down to test this level of support. So it's a bit of psychology there, right? Sometimes this is why over the years my stop losses have gotten larger and larger, and I just manage the position because things like this are going to happen. It's not that you're wrong on the direction, but the market tends to sometimes do this where you're going to put your stops, maybe 100 pips away or right over the previous high. Market's going to pump all the way up, stop you out, liquidate you out, and then make that reversal. So you also have to take that in consideration. 9 times out of 10 or 8 times out of 10, you can go short here and the market would just roll over completely, right, with no pullback. But there are, a few times where the market will try to pump up and take you out and then, confuse you a little bit. Is this really going to be a bullish move? Is this really a bearish move or what? And then finally it rolls over and goes in your direction, right? So you always have to keep that in mind, that the market's always going to do something that, would pretty much piss you off. So I wasn't in this trade, but I was keeping an eye on it. And right now, I found some support somewhere in this area here. And this is where we are now. So considering that I'm bearish on the EUR USD, granted we don't go above that 1800 zone, I expect the pound dollar to also roll over and break this low. Definitely trade below 3,400, right? So just a little fun little analysis there, but yeah, that's usually going to happen, and that probably happened here too with this run up, right? Where you had this looked like a good area to go short, and again, the divergence was there, so going short here was warranted. It wasn't a bad call, but made that huge run up, 250 pip run to stop out anybody that had shorts, stop losses up here, and then reversing back. And then now we're looking for a reversal here. Considering we don't go above 1800 and change or R3, right? So, but that's going to be it for this this analysis. We'll see what happens going into tomorrow and Friday for the remainder of the week, and possibly if we get a dud going into early next week, right? The following week also, I think we have FOMC if I'm not wrong. I haven't checked the calendar, but yeah, we do have a good amount of economic data from tomorrow all the way on to next week, and that should really get things moving, whether it's going to go in another direction or not. But from a purely technical standpoint, I'm bearish for now, and given we don't start trading aggressively above 1800, and we start rolling over from there. So with that said, I hope you enjoyed this quick analysis on the Euro USD, and we'll see what happens going into tomorrow. So like always, good luck and trade safe.